BRRR property strategy is a great strategy to help you build wealth in property. So in this video, we're going to go over what BRRR is in the property strategy, how you can implement it in your business, and what sort of asset class you should be buying using the BRRR strategy suited to you. So we're going to go through a little exercise, so make sure you continue watching. But before we get into this exercise, please give us a thumbs up. If you enjoy these videos, it really helps the channel if you give us that thumbs up. But let's dive straight in. So what is BRRR? BRRR stands for buy, refurb, and refinance. Then at the bottom, you rent out. So basically, I'm Harvey, my property investor. I've been involved. I built a portfolio up predominantly off of the BRRR, 250 miles from where I live remotely. And we've been involved with best part of 200 deals. A large proportion of those have been BRRR deals. And how I can explain this out? So let's explain through briefly, and then we'll go over what sort of strategy you should be adopting for BRRR to build out your wealth. So how you explain this out? The buy part of this is you look for a property that needs work doing to it, which you can buy at slightly under value. And by the way, I'm going to use rounded off figures for this, just for the example's sake and make the math easy in my head. There will be other fees and stuff that you incur with this that you have to consider, but this is just giving you the principles behind it, not an exact breakdown of the numbers. But let's say you find this property and you pay 60k for this property because it needs work to it. Let's see if we can do a set of hammers there. The work it needs doing to this, you can't tell I support West Ham, but the work it needs doing to this, let's say the property needs, let's say 15k spending on it. Work, this is including the buying cost, your stamp duty. So the total amount that you've got into this property is going to be a grand total of 75k. So the idea behind this is from spending just spending say 10k on refurb and 5k on your legals and your costs and everything, by spending this money, the idea is you want to force the value up of this property. So you want this property to go up in value. And now this new property over here, it's turned into red because you've done a nice refurb and you have painted it red. This new property now is worth 100k. Just for round figures. It very rarely happens this straightforward. You often usually do leave some money in there. But in this example, what you do on the refinance stage, you'd go back to the bank. Let's get our green again here just to make it look good. You'd go back to the bank and you say, I want a 75% mortgage on the 100k. So you're gonna get 75% of this 100k, which equals 75k. This is why I've done these figures, because it's nice round maths. So if you have 75k in the property initially, so if these are your purchasing costs, 75k, I didn't put a K on the end of there, that means when you come to refinance, so you've bought this in cash, when you come to refinance, it means you'll get 75k back in your pocket. Obviously there's fees, there is other ways you can buy this. Look, check out this other video here about different ways to structure BRRR finance and stuff like that. But ultimately we'll talk about cash. If you bring bridging involved with it, if you bring mortgage involved with it, there's going to be other fees. And yes, you can do BRRR on a mortgage without committing fraud. Check out the other video that I have linked in and it will show you exactly how. Then the final part of this equation with the BRRR strategy is you want to then take that property and you're looking to rent it out. And in this example, I'd probably achieve something like $650 per calendar month rent. And you probably have around, I don't know exact figures, but on a 75k mortgage, you're probably going to have about a 250. Your mortgage is going to be say 250. Don't know exact amount. I'm just saying on a rough guesstimate, and it's a very much of a guesstimate. Anybody knows the real answers, put it in the comment below. Meaning you're going to profit the margin between them minus your taxes, your maintenance and your management fees, and that is going to be a infinity return on investment because you've got all your money out. In the same case scenario, if you'd paid, say for example, let's cross this part out, if you spent 25k here instead, that would have meant when you come to refinance, the total amount you've got in the deal is not 75k now, it is 80k. So when you come to refinance, it means you're going to have not all your money out, you're going to have 75k of your 80 back, or no, sorry, this is going to be 85k, 75k of your 80k 10k back, meaning you would have 10k of your money left in the deal, which is still, if you're going to profit roughly around 350 a month, 350 on a 10k investment is phenomenal, considering it you'd still have 15k worth of equity in now. So it's really, really strong returns. But what should you be doing? This is based on a single let property. So I put together this formula. Like, one of the things that bugs me is you see these people standing in front of a Lamborghini saying, because I've done it, so should you. And that's total BS. So there's different strategies in property that you can build wealth from. And this is what I call my property delta matrix. I'm super proud of coming up with this formula. But with the delta matrix, these are the different property and asset classes you've got within there. You've got different types of properties. You've got buy to let at the bottom, which is your foundation sort of stuff. Then above that, you've got your HMOs and say SAs, which are a bit more complex but earn more money. Then above that, you've got commercial conversions, and above that, you've got developments. So how you figure out all of these strategies can be done with the BRR. You can do build to let, which is theoretically BRR. You do commercial conversion, where you buy a commercial building, turn it to residential, convert it, then finance it at the end, pull your money out. That's buy it, refurbish, refinance, just on a larger scale, these ones. You do it with HMOs. You can do the refurbishment, force the value up with commercial lending. If you're not sure what commercial lending is, watch this video here. You can do it with SAs. You can buy a building, again, do the work to it, rent it back out, and buy to let. So buy to let is the most simple form to do this with, because the further you go up this matrix, this delta matrix, if you're wondering, delta in Latin is a triangle, so that comes from a delta. But if you're wondering which are the best of these strategies for you, you've got to figure out where you are in your journey individually. So these are the things that makes a business, or any business. So you've got money, you've got to figure out how much knowledge you've got, you've got to figure out what's your network like, and in the middle, let's put this in this color here. In the middle, you've got to think about what is your time. How much time have you got? Because the higher you go up here, the more money you're going to need, the more knowledge you're going to need, the more network you're going to need, and the more time you're going to need. So doing HMO 100, 200k refurbishments are different builders from the buy to let. You need different tax advisors. You've got to be thinking about capital allowances. You just need different solicitors, and you need different brokers potentially what you do at this bottom level. And similar again when you get up to the top here, it's very different. So you need a wider network. So how you can figure out where should I be starting, because some people have got transferable skills, some people have already got experience. So how you figure out where you should be starting is, if you took this here, each one of these, and questioned yourself on these 0 to 10. So from 0 to 10, we've got what we've got here. We've got money, we've got knowledge, we've got network, we've got time, and you've got courage, confidence, and conviction. And what you want to do is score yourself from 0 to 10 on each of these here. So 0s and 10 on all of these. And from 0 to 10, ask yourself, what have I got? Again, like, if you think about your money, if you've got 40k in the bank, then realistically, unless you can borrow money, you're realistically are refined to buying these style ones, and they are only in the north, hence why I started buying in the north and not in the south where I live. So you'd probably score on the basis of buying a 60k property and you had 40k in the bank, you might score yourself here. It's not a tremendous amount in the grand scheme of property, so a lot of money, well done if you had that money. I'm not being flippant on that, but on the grand scheme of it, it's not loads of money in property. But if you want to do HMOs in the north and you had 80 grand, you'd probably score here, and you could start maybe considering about HMOs in the north, buying 100 grand buildings and converting those. But again, if you want these really large ones, you just need more capital as you go further up here. Again, with your knowledge, you need more knowledge. So where do you score? And when I mean knowledge, I mean experience in the game. Have you delivered developments before? If you've never done property before, but you're a builder, you might have transferable skills, or your dad's a builder, for example, or your brother's a property investor and you can lean heavily on them, or you're in a mastermind. I wouldn't do this off of weekend training off of YouTube videos, but if you're in a mastermind in a year program that's giving you support, then you could score higher up on knowledge because you're vicariously taking the knowledge of the person and your mentor, or your brother or your dad or your uncle, whoever is in the game that you can lean on. Network wise, have you got the builders? For me as well, you've got to look at what area these builders in. Have you got the network of solicitors and brokers? Because again, I said, higher up here you go, the more you'll need from that. So what you do is you score yourself from 0 to 10 on these. Then the big one is time. So at the moment, I've got 4 properties in legals, which are just buy-to-lets with sitting tenant in them, because I've got a project on that's taking me away from time. I haven't got a team. Like, we've got the deal sourcing business with my partner, and the builders are taken up just doing the projects there. So we've not got, and we're predominantly doing like buy-to-let projects in our deal sourcing business. If you want to understand what deal sourcing is, watch this video. But we've not got a network of builders to do larger projects. So I haven't got the time to find the builders at the moment and manage those and everything. So I've diverted, even though I can do these bigger projects up here, I haven't got the time to deliver on that, and I haven't got the network in place and the time to go and find that network. So I've just defaulted back. I've got money in the bank, so I'm buying just 4 with sitting tenants in there. They're not the wildest returns on my capital, but they're giving me something what is relevant to the time I've got to put into this. This is a big thing people take away. You can do most things, but you can't do everything. So just because you're capable of doing something, it doesn't mean you can magic up the hours to squeeze that into your diary. And then at the bottom, this is a really, really, really big one. Courage, confidence, conviction. How much stress and pressure can you handle? How well are you at convicting? Because when all is said and done, more is said than done. More people talk a good game that don't take action. And the biggest thing that stops us from taking action, by the way, is fear. And the more further you go up here, the more fearful it becomes. The more stressful it becomes, the more moving parts. You like, if you're dealing with this, you're dealing with like contracts and contractors and architects and all these things. I bought a piece of land as my first deal, and as soon as I'd never even done a refurb before, I'd never worked on a building site before, and as soon as it come to I might have been a labourer once on a building site saying that, but either way, I'd no experience in that, never even spoke to an architect before, I had no network. And then as soon as it come and I started speaking to architects, speaking to planners, coming up with these challenges, it was all language I didn't understand. It made me really out of my comfort zone, too far out of my comfort zone. And what I ended up doing is shrinking and procrastinating because it was so fearful. And I ended up selling that property at a massive, massive loss, or that piece of land at a massive loss. So I should have just started on a smaller project, built my courage, confidence and conviction up, built up my abilities to handle stress, and built out my network. So the BRR strategy, as I said, is great, but you need to pick which one of these property sort of strategies you're going to do within the BRR relevant to where you are. Don't just chase the shiny penny stuff. Do it relevant to where you are. So I hope you found that useful. Make sure you watch this video now, because it's going to be helpful for you to understand more about bridging and finance with this, because this is just a simplistic example. We'll show you software, what you can use with that. And if you're still here, make sure you smash that subscribe button. If you got value from this, please share this out. My wife's living my terms. My mission is to help as many people live on their terms, using property education as a vehicle to do that. But remember, if you don't evolve your ideas, you'll never live on your own terms. So evolve your ideas, live on your own terms, and have an amazing day.